You're entering the future-ready CNBC-TV18 EBIX Cash Studio.
A volatile week saw the Nifty and the Sensex end absolutely flat, with the Nifty Bank underperforming. However, midcaps fared much better and ended the week close to 0.25% higher. Hello and welcome to CNBC TV18 EBIX Cash Studios here. This is Taking Stock, the show where we review the week which has gone by, but more importantly, try and prepare you for the week which is in front of us. I'm Prashant, with me, my colleague Surabhi Upadhyay. Hi, Surabhi.
Hi, Prashant. Yes, quite an interesting week, and there's lots lined up on the show as usual. So here's the lineup. Well, today we'll have with us Andrew Holland, CEO of Avendus Alternate Strategies. He'll give us the fundamental picture and perspective, and Jai Bala of Cash the Chaos will join in on the technicals. We'll get you market opinion that we gathered during the course of the week. That includes the likes of Hiren Ved, Alchemy Capital Management, Ashish Gupta of Credit Suisse India, Saurabh Mukherjee of Marcellus, and several other voices. But before we get to all of that, just a quick check on what transpired. Now, it was a bit of a pause week. Yes, finally, after the heady rally in the month of August, the bulls paused for breath. The tally is going to come up on your screen. That really meant a marginal 0.25% increase on the Nifty, a 0.25% decline on the Bank Nifty. Mid-caps and small caps did relatively better, so the broader market still saw action. Beneath the actual headline index surface, of course, there were individual stocks that were flying around. Having said that, even globally, markets have taken a bit of a pause, and it seems that they're now looking for fresh cues because that whole Jackson Hole taper sort of a situation is behind us. The non-farm payrolls data out of the US is done, and now we're looking at the next steps or the next leg. So in the interim, what did happen was that a lot of the dips kept getting bought. So the market was refusing to break down. Therefore, I use the word consolidation. In terms of sectors and themes, telecom was definitely a big one. Bharti Airtel, for instance, was one of the key gainers of the week. This despite the fact that no actual relief came in from the government. The week was abuzz with a lot of speculation about perhaps some relief on AGR or spectrum payments for the sector as a whole. Well, at least as of now, we don't have any evidence of that. Auto stocks remain subdued because the inputs that we're picking up here at CNBC TV18 is that the PLI scheme for the sector may not really focus on the OEMs, could focus more on the EV players and that side of the new technology side of the supply chain. So therefore, auto continued to be on the back foot. Then you had, of course, other sectors making up for it. IT, for instance, continued to find takers. And property was very hot. Whether you're talking about the builders themselves, those stocks, or whether you're talking about housing finance, that did emerge as a big, big theme for the week. But let's go across to Agam for a lowdown on the more specific stock-by-stock account of the week gone by. Agam.
Well, yet another week where it's been good momentum, and it's been a stronger one for those which are advancing as against those which are falling. And I start off with the index, where we have Grasim, which is the lead out here, up as much as 6%. With the entire telecommunications space, we have advances for Bharti Airtel and about 2.5% gains for HDFC Limited and HCL Technologies. On the losing end, not too much in terms of momentum, though 6% decline in SBI Life. But besides that, we have anywhere between 2 to 3% declines for Sun Pharma, NTPC and Divi's Laboratories. The picture in the broader markets is a lot more different because there has been substantial strength in some of these mid-cap companies. So like coming down to something like a Dynamatic Technologies, and that should come up for you on the screen. That's up as much as 24%, 21% gains for Prime Focus, Sundaram Fasteners and Carborundum also advancing by around 12 to 13%. And on the losing end, not too much to go for here. Apollo Hospitals under a bit of pressure. Profit taking in J. Kumar Infra, Fortis Healthcare, Moil and Chambal Fertilizers, all of them losing out around 4%. But on the whole, a great week of trade.
Agam, thank you very much. I mean, it's been very many great weeks of trade. I'll just sort of weigh in for a quick bit in terms of where we are now. I mean, you know, Surabhi, on the 4th of August, I remember I put out a piece comparing the breakout we had seen. The Nifty was about 15,900 back then, and I'd compared where we were, in that moment to the breakout we had seen 10 years prior. Where the conclusion was that, 10 years ago, we had a similar breakout. The structure looked similar. And back then, the market ran up 15% very quickly before topping out for about 2 years' time, right? That was just sort of, in uncharted territory. Overlays work very well. Overlays on what happened earlier in the past. Guess from that point on how much the market has done. 10% from 15,900 to the highs we saw 2 days back. And even at today's close, we are not very far away from that. So, I mean, it seems that we are in that moment of time where many people, although they are making money on stocks, they're starting to ask themselves whether this is too good to be true. So I think, it's an interesting phase in the market. Just a couple of points to be very, very specific now. What do we have in terms of, what we see from here? I think one needs to watch the global markets for cues, at least in the very near term. The dollar has been strong for the last 2 days. Will that be the first signal? We'll see. I was mentioning this earlier as well in the day. Citigroup runs an indicator which essentially tracks complacency based on some 19 inputs. And Citi is saying that that's now starting to flash red in terms of a warning sign. It's got a 65% hit rate, so it's not a given. The question is, what could prompt a pullback, right? I mean, you go to look for things, there are many things, but the point is, all these, it's nothing new. These things have been there, but sometimes what happens is that market starts to come off, people take profits and then, cite one or two of these reasons as an excuse for profit booking. So we'll see, where markets head from here. But as I said, this is an interesting phase we find ourselves in. Andrew Holland is someone who'll weigh in on some of these points. He's CEO at Avendus Alternate Strategies. He's our guest on the show. Andrew, great to have you here. Thanks very much. The run's been quite something, isn't it? As someone who's always talking about buying versus renting stocks, going long versus going short, you run one of the largest long-short funds in the country. What is your view, Andrew, at market levels we are at?
Maybe, Shanna, I was listening to you, so maybe you caused the last 10% rise with your historical evidence. So perhaps you could tell us the downturn as well. That aside, I think the market is overdue for a correction. We all know this. But what's the catalyst to help that to happen? And, some of the things I've been talking to you about over the months has been the kind of shock or potential shock to kind of global growth, because of, what's happening in China, consumer spending not following through as people were hoping. So those are the kind of things which, we're starting to see forecasts being lowered. We saw Goldman's reduce the GDP forecast for the US this week. They've done recently for China. And as the supply side is still, kind of edging upwards, there's still problems with input prices. Commodity prices have continued to rise. Industrial, kind of metals, the latest one to have a big increase. And of course, you're going to try and push this onto the consumer, who, initially might take some of this, but it's inflationary. So that transition in terms of, is inflation transitory or not? I think the question mark's still there. So it plays into this, the fact that, that the Fed will obviously taper at some point this year, probably December. But the question is that going to be at the same time when growth is going to start falling globally? And that will impact earnings at some point. And that's what will probably cause a market correction, to my mind. If you look around the globe, we've been in the UK, they've done an increase in tax through the national insurance to pay for the healthcare costs. And there's probably more taxes coming in the UK. Now, if you fast forward that to kind of what's going to happen in the US, there's going to be more taxes. I think the market's just not taking into account the negatives, because we still have strong liquidity, and that's flowing through in different asset classes, particularly commodities at the moment. And that's a concern. You get this kind of high inflation, slowing growth, and tightening. And I don't think the market's going to like any of that at some point.
Well, that would indeed be the perfect storm, Andrew, but I don't think anyone's even looking out for that or towards that right now, right? Well, pleasure having you on the show, Surabhi here. So, in the interim, we'll get to that as and when we get to that. But in the interim, looking at the Indian market here, where practically every sector has run up, so-called value buys have also now run up. What do you do? I mean, for your own funds, I mean, are you raising cash levels, or are you thinking of more of the short strategies now? What's the tactical thing to do at these all-time highs after this big rally?
I think what we're doing is obviously, within the kind of, with the overall market, you are getting, kind of new parts to the kind of growth scenario. So if you take the kind of financials, whilst it maybe have not been the banks, if you look towards the kind of asset management companies, the life insurance companies, you're seeing growth, starting to pick up for these companies. So, you'd be able to kind of make some more money there than maybe a traditional kind of the banking sector or the private banks, which you would normally go to for financials. But to answer your question, we've increased the cash levels, we increased the hedges, because you're coming to that point where it's just a little bit harder after a good, nearly 8.5% rise last month to see that kind of follow through, given all the volatility that we're seeing in terms of whether it's lower growth or there's problems with in terms of FII flows at the moment, because we've seen some negative flows coming in. So that that's the kind of thing that I think the market's going to grapple with. But what we've been seeing is that any kind of market pullback has been that usual buy and dip. So it's just keeping people optimistic that it will continue. But the more investors I speak to are starting to raise some cash at these levels.
Okay, most people that you speak to are starting to raise some cash at these levels. There was no sector which stood out in a big way. Real estate, for example, last week was up some 10%. This week, not very much. But stocks did. IRCTC is one of those stocks. I mean, it was up 15%, hit a new record high. Mangalam is here with some details on what is going on with IRCTC. Then coming to you with a question, Andrew, on it. Mangalam, over to you.
The IRCTC Express continued to march on this week as well, was up almost 15%, hit a fresh record high, hit a few milestones as well. The station 50,000 crore in terms of market cap came by, and the stock also returned 10 times versus its issue price this week itself. 15% higher by this week, 20% this month, and almost 130% this year. It's an unlocked trade that's playing out as well as the number of travelers are increasing ahead of the festive season. That's what the street is betting on. Remember, sometime last month, the company restarted the Tejas trains, which it had shut on account of the second wave of COVID. The stock has been on a one-way rally ever since last December, when the government went ahead and sold its 20% stake via an OFS, and that limited the supply that was available post this OFS in the market. Thereafter, it was included in the FNO space, or FNO trading, from the March series, and the biggest rally came only after August 12, where the board went ahead and they are mulling a stock split as well. So all of that were also some other liquidity-inducing measures.
Mangalam, thanks very much for that. Andrew, any thoughts on this one?
Not specific, but what I can say is that I was actually in, so just to back up what was being said, when I was in Delhi last week, I was staying at the Taj, and in terms of when you went down for breakfast, they had to open an extra kind of dining room, dining hall, because the number of leisure travellers there vastly outstripped anyone from business travel. So people are taking, actually in Delhi, the pools are open as well. So that staycation, we only call it reopening of the hotels is really taking a big improvement. And I suppose if pools were to open, in swimming pools were open in Mumbai, I think you'd probably see the same kind of result for the hotels. So leisure, or getting to new experiences, right? We all want to do something different than we've been doing than just sitting at home or now at the office, and trying to kind of have a better experience from just the last 1.5 years. So I think that will continue. And to be honest, if I think about, say, Diwali, and you want to think about travel, there's nowhere else to go but India at the moment, right? Unless everywhere else opens up very quickly, and it doesn't look as though Asia is going to do that. And certainly, no one wants to go and sit in a hotel being quarantined in Europe either. So I think, the whole of the festive season. I think we're all going to be scrambling for places to find and probably paying quite a lot of money to do so.
I'm pretty sure, Indian hotels as a stock is going to be in key focus, because you told us about the Taj in Delhi. I'll tell you, I was trying to get a cup of tea at the Taj in Mumbai. I was turned away. No place available. But that's on a lighter note. The question that I'm asking you, Andrew, is that therefore, on the discretionary consumption side, would you pick anything here in the market?
Well, again, obviously going to Delhi gives me a lot of new ideas. So during that stay, I met someone from the diamond industry. They had some 3-day event there. And I was just saying, how did it go? And he said, the interesting factor is this, is that maybe people are not buying as much in terms of volume, but in terms of value, because obviously, there's a number of restrictions in terms of how many people, they're actually spending more on jewelry, for weddings and anything else. Than they have been before. So I think you could probably, put that across all the kind of jewelry stores in India, and probably find that that's the same kind of scenario. So, discretionary is spending is starting to pick up as well. And that's what you're starting to see, these green shoots across different industries as things start to kind of pick up. And, I think I saw Kotak Bank has reduced the kind of interest rates for new home buyers. So again, that's going to have an extra catalyst to buying homes. That feeds through to all the suppliers to building or construction, from paints to pipes to window frames. So all of these companies will start to see the benefit of this, and that's where those green shoots are coming from. So the consumer still has money in his pocket to go out and do things, and experience is one of them, and obviously jewelry is the other.
That, and we will keep those inputs in mind. Andrew, always a pleasure talking to you. Thank you very much for making time for us and being with us on the show today. Well, that's Andrew Holland, and on that note, we do have to take a very, very quick break. As we do that, we'll leave you with some market opinion that we gathered during the course of the week. On the other side, technicals with Jai Bala.
The Indian stock market has created $1 trillion of wealth in the last 10 years. But 80% of that wealth has come from 16 stocks. So 16 stocks have driven 80% of India's wealth creation in the last 10 years. Remember, the stock market has 6,000 stocks listed in our country. So it's like finding a winner in the Indian stock market is a bit like finding a needle in a haystack.
At the beginning, you are always apprehensive, earnings are not there, economy is in bad shape, something or other is there which keeps a lot of people disappointed. Again, commodity boom is there. All kinds of commodities are booming right now. We are good for 2-3 years, as I see it. And let's see, where market goes. Already the signs of overheating is there, but I feel comfortable.
Your health is our concern. Choose appropriate hospital. Our telemedicine and customer care team will guide you if required. Star Health Insurance, always at your doorstep.
घर आए मेहमान से लेकर घर बैठा खानदान, मैसूर से कोयम्बटूर, भोपाल से बर्धमान, हम हैं तो रोशन रहे सारा हिंदुस्तान. एक्साइट, India's #1 inverter battery.
Check this out.
It hasn't been such a long time since people first started shopping online, and it was easy to keep up with the clicks. Little by little by little by more, the clicks added up to be more than the stores, and e-tailers worked harder than ever before because they had to keep up with the clicks. No time for borders, gotta stay in control to stay in the flow and continue to grow. But we'll help you keep up with the clicks.
Who said the markets can't be exciting? Who? Get the lowdown on the yays and mays. Straight from the top, catch market feels and news reels. Number crunch for the best of the bunch. The bigger Q for the richer you. Hot trends, big noise, what's viral and what's out. We'll give you the market goals you need to stay ahead. mad about markets. At these times,
CNBC TV18 EBIX Studio, powered by EBIX Cash.
Welcome back. Here with us on Taking Stock, and let's take stock of the technicals of this market given the consolidation that we've seen this week. Jai Bala of Cash the Chaos is with us. Jai, thanks very much for joining us for this quick chat. So, after a relentless run, finally we've seen a pause. Is this still a buy every dip kind of a market, or is it time to be a little more cautious than that?
I would say it's slightly moderated by the dip, Surabhi. Basically the market still has a pending sequence of higher highs to come through. This is what I said last week and a couple of weeks back. So basically, I was expecting the IT sector and the FMCG sector to lead the markets to higher highs, and that's been happening. But what has happened right now is IT, the frontline names are cooling off a bit, but FMCG names are still quite strong, and momentum is still with them. So, surprisingly, Reliance was expected to not cross record highs of 2367. It clocked in September 2020, and it's done that. So, the market is getting additional strength from Reliance. So, basically, there is, opportunities in the market, but it has to be a little more staggered and a little more measured. That's the slight change that I was talking about.
One of them could be Kotak, Jai. I mean, you believe Kotak potentially could lead the banks?
Yes, that's right. The banking index, even if it were to clock, fresh highs above the February 2021 highs, which has been struggling to, push higher, I think it will come because of Kotak, and I had mentioned this last week too, and it's seen a little bit of gain here, and it's behaving normally as you should expect. But once the banking index goes to record highs, I doubt it will hold there because of weakness in the rest of the sector. So I think Kotak is a place to hide or to allocate if you want to be in the banking space. ICICI is still a strong one, but it's done its objective of about 740. So I think there's very little upside left there. So if you want to have incremental allocation within the sector, it's Kotak.
Okay. Jai, we've seen a big move on Reliance. I mean, not so much this week, but earlier this month, this mega move. Will it continue to be a pillar for the market?
See, there are two possibilities for Reliance out here. If it both point to record highs, but how it gets to record highs, that's the only question here. The one possibility is that this is a sort of a complex move, and it struggles below the high it recently registered this week at about 2480, and it goes down somewhere close to the 2000 mark, and then comes back to record highs. The other alternative is it goes directly to about 2600 to 2900, and then it completes a cycle that started from March 20 and then triggers off a large degree correction for the entire move from March 20 to September 2021. So that's the possibility. It's clear, so not clear. So the next couple of sessions will probably point to which direction one wants to stick and take a call on that.
You believe, briefly, Jai, I just want to get your thoughts. Autos, you believe a bounce is possible. You're saying aluminum stocks should stay strong, and you have a specific call as well, Tata Chemicals.
Yeah, that's right. See, metals, I believe that it had topped, barring the aluminum space. That's behaved perfectly. And right now, within the aluminum space too, I think Nalco is a stronger one. So if you are already within the metal space and participating, I think you must hold on to aluminum stocks. But others, you should have already booked profits. Autos is one of the weaker pockets, but I think M&M and Maruti have potential for a small bounce, a trading bounce, a quick, profit-taking potential if you participate, but you have to be light on it. So something like a 8 to 10% move is in the offing for M&M, but not that big one for Maruti. Coming to specifics, the chemical sector still is not done. Possibly the frontline names, SRF and Tata Chem. I think Tata Chem has a much better risk-reward potential. Once again, the allocation should be not the normal size, lower size, but if you try to move, I think it's going to 910 from current levels. So a stop under 790 would make a lot of sense for me.
All right, got that, Jai. Good having you on the show with your perspective. Thanks very much for joining in. And with that, of course, we're completely out of time as we take your leave. Actually, let's play out some more market opinion that we got during the course of the week. Hear it out from Hiren Ved of Alchemy, who says that the market is moving higher on fundamentals and not just on liquidity. Ashish Gupta of Credit Suisse India is betting big on the fintech space.
As I've said in the past that, we believe that it's not just a matter of liquidity, but I think that the strong earnings growth, which is propelling the market, our belief is that the next couple of years, the earnings of corporate India will surprise people on the upside, just like it did in a pandemic year like 2021.
Some of the underperformance of Bank Nifty that you spoke about earlier is reflective of the fact that fintechs are gaining in prominence. I think both in terms of just allocation of capital, but also how we think the profit pool of the financial sector will be distributed.
Well, fintech versus old legacy banks. Interesting comments there from Ashish Gupta of Credit Suisse. It's a wrap, though, on this edition of Taking Stock from Surabhi. Me, everyone on the team, thank you very much for staying with us. More coming up in just a bit.
Trust the one.